Hi there. So today we are discussing trading a Euro USD futures options because there is a lot of volatility in the market right now. There is a Fed meeting coming up on December 9th and 10th, and then they will decide whether they will cut the rate or keep it unchanged or maybe even increase the rate. So I'm going to show you how to actually check what is happening in the rates market so that you can come up with a thesis where you can apply it on a trading level. Meaning, do you want to go long the Euro, short the USD, or you want to do the vice versa trade, meaning you go long the USD and short the Euro. And I'll show you exactly how to do this on the trading platform. We will put a live position on. I will trade in my live account and I will show you exactly what strikes to select, what I do on a normal basis, regular basis, and how do I look at these Euro, USD, FX markets or any other FX markets that are available out there. So let's jump right in there. Okay, first thing I want to show you is what to look for before the Fed FOMC meeting. So the next one is 20 days out. Find enough time in the trade for us to collect some premium. Now there are some juicy premiums available on the put side here, and I will show you on the broker platform. Before we dive in there, I want to show you this tool which tells you the probability of actually rates going up, down, or staying unchanged. I'll do a quick review. There's a longer, more complicated methodology here which you can look at as well, but overall I'm just going to give you a brief overview of what this tool is made up of and how to actually look at it, analyze it for your trading purposes. So this one is called the FedWatch tool. It tells you the probabilities of the upcoming rate decision in their next meeting. It gives you probabilities for the next so many meetings, maybe like next 10 or 12. But our main goal is to check the next meeting probabilities and then make a trade around that. So based on that, what this tool does, it takes into account 30-day Fed funds futures prices. Now, what are these fund futures prices? There are futures available in the market on the Fed funds rates that you can trade regularly on a buy, sell. There are no options available, I guess, on them, but you can do the long and short of them. Okay. Now, based on those, what this tool does is it takes into the probability, and I'll show you exactly where these numbers are coming from. First of all, let's look at the, how this number is made up of. How is Fed calculating the probabilities of this rate decision? First of all, you select the upcoming cycle, which is 10th of December, only 20 days out. And you can go on this link and then just do whatever you have to do, check everything there. The next thing is this is the contract ticker called ZQZ5. Now we'll go in the broker platform and I'll show you that. It expires on 31st of December. Let's look at the ZQZ5. Let's put the ticker in /ZQZ5. Okay. And this thing comes out. Look at this. 31st of December, one contract available, which is 41 days out. It expires December 31st. This is what the tool is using right now. This futures contract. Okay. What else is here? The mid price. Look at the mid price. Where is it trading? Last price 96,175. If you go back into the account, if you go back on the Fed tool, 96,1775. That's the mid price that is trading at. Volume is slightly off because this thing is not updated live, this tool, but the broker account is actually updated live. So it tells you the current volume that's going through. It's slightly over or slightly more than what the tool has, which is 194,000 contracts. Everything else is here. So you can look, this is expires on 31st of December. And then what else are they looking at? They are looking at, based on all of this, open interest. Okay, so the broker platform does not tell you the open interest, but the Fed CME website, not the Fed, the CME website will give you the open interest if you look into the contracts, and I can show you where to look for that as well. And then based on all of that, it tells you the actual probabilities based on where the rate will be. What are the probabilities of the rate being in this range, 350 to 375? It's 41.6. The rate being between 375 and 400 has a probability of 58%, meaning there's a 58% chance that the rate will go up from this to that, which is a 25 basis points difference. That's what this tool is showing. That it will ease is 41.6, 58% probability that there is no change, and 41% probability that there will be an ease in this rate. It will go down. Before I move the cursor the other way, it's actually, whichever way you look at, the higher probability is attached to a no change event. Now, if there is a no change event, there's no probability attached to a hike. The way the market is trading right now, they think that there will be no change in this interest rate in the December meeting. It could be in the next few meetings. Look, you can go into the December one, January next year. You can go into March. You can see all the probabilities. But the closer you get to the date, look, it just updated. I re-clicked it. It just updated that. There's a 60% chance there is no change in this meeting. And based on that, the trade that I am setting up right now is, this is my live account. Let's look at the trade that I'm setting up. Okay, so now we know a little bit about the macro side, what is happening in the rates market, how to look at, analyze that tool. I actually forgot to show you the main detailed methodology of it. I've already read it. I understand it a little bit. I don't understand completely, but I need to do more research on it. But if you want to look at how they calculate the rate, there are certain examples given here. Read through this methodology, come down here, and then there's an example here. You can pick this example and then just see how they're calculating this whole probability of rates being changed or not changed. Okay, you can go through this document if you have free time. Now let's go back into the broker platform. I want to keep the video really short and really to the value here, to the point, so that I don't waste your time, because I know you were spending some time on my videos to like learn something. Okay, so the 6E contract is the Euro USD contract. A few things to look at first. It's up 10 basis points today. That's fine. The number one thing I look at, up 11% over on the year. The first thing I look at is where the DXY ticker is. This is the dollar index. It is ticking at 100. That's what its average is or has been over the long term. But this year, if you were to draw a line, that line comes up to about 98. Okay, that's fine. It's lower than 100. Now, what does 98 mean? 98 means that the dollar value is low and then the euro value is higher, meaning the euro value is more than 1.15 on average. And you can check that by looking at the euro chart, which is here. If you look at their average, it's about 1.16. Okay, so what are we trading right now? What are we trading today? Okay, going to do the trade tab. The cycle that's available to us is 50 days out. Totally fine. Really good numbers here. Again, a few things to look at before we do anything. Open interest and volume. Okay, small volume, because before the meeting, I've noticed that there isn't much going on in these markets because people are just waiting for the decision to happen or get through this before they make their next move. So these contracts are already opened. The highest volume or highest open interest is at this strike, which is 1.125. Okay, that's where the highest number of contracts are. Well, actually not highest, but the second highest. The highest ones are at 1.135. So I usually trade the full numbers, meaning I don't trade the 0.5s. I trade 1.12, 1.11, and similarly 1.13 and all those. Okay, so based on that, we will take a trade today, which is 50 days on. We'll try and get it filled on this video. Let's see how that goes. So again, I'm going to select my strikes, which are, I was looking at actually I will have to take 1.135 today because there is good open interest and low volume, but good open interest. But again, my delta is sitting at that strike. So the delta that I like to trade is around 17 and 16, which is here. 20 is a little bit too far out. 1.14 is too far out. Another thing to check before we finish setting up the trade is, when was the last time it traded 1.14? 1.14 was almost traded at this level here. So if you go down here, it's about September time, August time. That's when 1.14 was traded last time. If you hover over this, 1.13, 1.14 was around August 1st. Okay, so last time it traded that level was about 3 months ago. So I think going long here, because the market has been on the downward trend, and as a contrarian, I sell puts in the down market and then sell calls in the up market. Those kind of trades have been working well for me in the past. So that's why I'm selling a put spread here. And I didn't mention that before. I should have done that. A put spread is like a sell on this level and then sell a vertical. We'll pick a vertical, but then I only go out one strike. I only go one strike out, which is my buy side would be 1.125. Again, that looks like a higher open interest number. Look at this, 4,700 contracts. Obviously low volume because not much is going on in this market today. That's why the volume is low, but open interest is high. So we're selling at 1.135 and we're buying it at 1.125. That's a simple trade of a buy and a sell. The credit that we are collecting is going to try and get 0.011, like 11 ticks. Each tick, I'll show you exactly how each tick works. What did I set up here before? Why did this one not come up? Okay, yeah, that's the setup that I like. 1.14, 1.13. I mean, again, that's a little bit close, too close to the market, but let's see 1.135. What are we getting here? So there are two different setups here that we can look at. One is giving us $131, which is not enough, I guess. So let's stick to 1.14 full numbers, 1.13 whole numbers. Okay, that's my preferred option. It's trading at 0.015. I'm going to try and get that. Let's stick that in, and then let me show you the probabilities on this trade first. Okay, first of all, you need to select your break-even points, which is 110. Make sure the date is selected here as well on top right, so that you get the right chart. Now, the next big number, the most important one, is this 82% probability, meaning there's an 82% chance that this market will stay within your gray zone. This is the expected zone here, expected move from today in the next 50 days. Now, if it stays within this zone, you will either make a profit or you will not lose money because this is within your break-even point almost. Okay, it's only slightly off from your break-even point. Usually, I try to get the whole gray zone within the break-even point, but sometimes it's not possible. So based on that, it looks like the gray zone will stay within our break-even points. Okay, and if I have to look at the Greeks, now let's look at the Greeks as well. I have to open the price slices to look at the Greeks. Pull this up a little bit so you can see the trade as well. Okay, first of all, we are going long delta. Now, don't worry about the big numbers in the currency markets. This is how they come up. We are slightly short gamma with long delta here, meaning the market has to go up for us to make money on the directional side. We're not really worried about the direction here. It's just about selling it into the strength of the market as a contrarian trader. That's all it is. We look at the price action. We decide whether to sell puts or calls. That's all. But on the macro side, we did look at at like where the probabilities are and how the market may react in the next 20 days, which is, in my opinion, it will stay within this range. It would not move much from here, either up or down, until the decision is done. So we will try and take the trade off before that. Let's see if we can collect enough premium before that for it to be taken out. Short Vega, again, when you sell options, you're short Vega. This is the tick that you get it. This day P&L if you get this price. Now let's try and load and see if we can fill that in. And also let me show you the trade ticket. So you are collecting about $180 going in, and then you will deduct another $450 and $324. So another $8 will be taken off and you take this thing off. That's for the commissions. So let's say you take that off and you collect $170 in total, and you're putting down $400 to initiate this trade. Now, if that was the case, that's a good amount of return if you don't have to make any adjustments. There's no margin calls on you. There will be no margin calls because the way spend margining works, it will keep taking away money from your account for it to build up any volatility into the trade. But this is the initial margin that they require. Your account will be debited for this amount, $402.87. And this is totally fine. We're getting a good ROI if you can stay within this range. And let's see if we can put this trade in, see what happens. I think I'm going to work the order a little bit. Let's see if we can get this tick. I don't think it will work on this tick because it will be rejected. Yes, it does work on the full numbers. So therefore we have to, or whatever was canceled, we have to put that back in. So let's put this, create a duplicate order, put it in again at 15. Looks like it will take some time to like build this order at 15, but let's see what it does. And that's the trade. On the other side, let's look at the SPX Zero-DTE trade today. Again, I'm in the Zero-DTE market. The market is down 50 points. That's a big number for today. The overall markets are tanking a little bit. AI fears, whatever, macro situations. This is the number that I'm looking at, down 90 basis points. So what's the trade today in the Zero-DTE market? Okay, so volatility is up. Let's look at the chart. Volatility has ticked up. This is a good sign for option sellers like us. This is a good sign. The average true range for the day is like 91 points. Okay, this is in the last 14 days. Another thing that I look at is what is the average expected move for today? This is the expected move for today. 47 points up or down. Okay. So I'm going to try and cover at least 50 points from where it is trading right now, which is 65.80. I'm going to go back, see if I can get 50 points out on my range. So let's do the same thing. We're selling it at 65.20. Let's try that. That gives us about 60 points. Actually, let's do it at 65.25. And then I always buy 10 points out again. So my long strike will be 65.15 in this case, 65.15. And I sold the wrong one. I should be selling an iron Condor. That's how I trade Zero-DTEs, because you want to sell both sides. You don't want to be, caught on either side. So 65.25, 65.15. And then here on the call side, we'll do the same thing. Give us a little bit more room, 66.30, 66.40. Okay. And this is 66.40. Again, a 10-point wide spread, a 10-point wide iron Condor, reflecting $2.80. I'm going to try, it's doing 320. Let's try and put it in for 310, somewhere in the middle. Okay. Okay, your max loss is 690. Again, $1,000 minus 310. That's what your max loss is, 690. That's how much money you will be debited for in your account trading SPX. So these are cash settled. So the buying power effect, there is no leverage on the buying power. It's always like the full max loss amount that is taken from your account. Okay, so filled. It's like the trade is up, down a little bit, but it looks like it's flat. So that's okay. Let's analyze this thing. All right, let's bring this down a little bit. Take off my previous ones. Okay, so this is what the trade looks like right now. Again, this one is a paper trading account, so the charts are slightly off. 1121. This is what the chart looks like. We're bang in the middle right now where the price is trading, but let's see how this goes. So on the other side, I don't know if we got filled here. No, we're still waiting. So for the sake of this video, I'm going to try and take a mid price of 0.14, which is $12 less than what we expected. But let's see if it gets us filled. Yes, it does. Okay, this one has got filled up. Okay, so here's the trade. We got it filled. And let's look at the analyze tab. It's in there. I will keep you posted on how this trade goes. If I have to manage the trade or, do anything with it, I'm going to keep making the videos out of it just to make a whole full life cycle of this trade and see how this goes. Hey everyone. So very, very quickly, we are about to take the Zero-DTE SPX iron Condor off. And I wanted to show you exactly what we did and where we are standing right now. We are up 50%, almost 50% in the last 1 hour. I think we put this trade on around, there must be a time here, 10:46 Pacific time, and it's 11:45. Okay, so exactly 1 hour. We sold the iron Condor for $3.10. That means $310 in our maximum potential premium collected. Right now, we are up 172%. So we collect 50% of that premium. And at this point, I'm going to try and close this trade out because that's enough for me to sleep happily, sleep soundly at night, because I know my Zero-DTE credit iron Condor has worked, which had been working in the past. Again, the way we trade, 70% of the time our trades work and they provide a win rate to us, even though the wins are sometimes smaller in dollar amount, sometimes bigger, but the win percentage is always higher. Anyway, in order to take this one off, I'm going to show you exactly what to do. Right click and buy back for half the price. So we are paying $1.40, maybe somewhere in the middle, $1.50, just to get the trade going. This is a paper trading account. This was just for learning purposes, and this was to show you exactly how I would trade Zero-DTE iron Condors. Now I paid $1.45 to close this trade out. So we sold it for $3.10 and I paid $1.45 to close it out. So that's the difference, is basically the profit minus the commissions that I paid. So commissions in the real account would probably be $7 each way. So you can take another $15 out. So this is 165 minus 15. Okay. So we made $150 in 1 hour. That's the net profit that we collected in this trade within 1 hour. So what is the ROI? The amount of money that we put down was $690. Well, we collected $310 and then we put down $690. Okay. So for $690, you made $150. That's a 21% return in just 1 hour. That's the power of being patient in the market and getting the entry point correct in these Zero-DTEs, because that's the most important thing. Well, not just the Zero-DTEs. The way we trade, our audience and our clients and our students, we make sure that our entry point is always correct. Our entry point is always optimal, meaning we've checked, we have a big checklist to go through. We've checked 10 multiple different points. Their points, anything related to volatility, open interest, volume, all of that kind of stuff. And then we hit the button to initiate this trade, because we know the only thing that we can control is the entry point. Other than that, everything else is controlled by the market. So you want to make sure when you're selling options in high volatility environments like this, you always need to make sure that your entry points are always optimal. That's why we teach our students, and that's why we've been successfully trading iron Condors in the Zero-DTE space, plus credit spreads and other kind of short selling strategies. Else is on offer. So if you like this kind of stuff, there's a lot of stuff on my website. I offer a free live masterclass which is happening in 20 days on December 10th. Sign up for this. Seats are limited. I think there are about 50 to 60 or maybe 70 seats left in there. So come inside and then see what we are actually going to talk about. We will be talking about these kind of strategies and how to build these up, how to be patient in the market, more about mindset than actually the skill set. Because skill set is easy to learn. The mindset is the harder thing to pin down in this space. If you like this, go on this website, check it out. And then I have a 5-day free email course as well. A link of it in the description. Take a look at it. You will learn a ton. This course is better than people's paid courses. So this is a free 5-day course. You'll get an email every day with a ton of value, a lot of discussion about strategies, diagrams, charts, and everything. And then just let me know how this goes. If you have any comments or any questions about the video or the strategies, put it in the comment section. Otherwise, just please subscribe to my channel. Thank you very much for watching. Bye-bye.